Welcome back to Everything Money. If you're new to the channel, my name is Seth. I'm here with Paul and Mo, the trading and investing experts. I bring your normal person questions to these guys. And today we're doing a stock analysis. We've done a zillion of these. Paul, over 800 videos on this channel. We've been working our butts off for almost 3 years now. Today we're doing a blind stock analysis. You must be wondering why, because I had problems with this for a long time. You get caught up with the news, you get caught up with Facebook, what people are saying about companies, and it may hinder or help your thoughts about a company. We want to take all the emotion, strip the emotion. We want you to become an investing robot where you could look at numbers like Paul and say, is this company in the sweet spot for me to buy and or avoid? So we're showing Paul general charts from our software. He has no clue what this company does. For all they know, he could make 9 irons, baby key rings, anything.
9 irons. That's a very specific golf club.
Anything. I mean, they could be making crude oil. You don't know. But we're looking at the 1-year chart. We're going to look at the numbers behind their revenue, their profit, their shares outstanding. We'll get Mo's take on the stock. And then we will reveal, a mumble mouth, we will reveal what this is and see if Paul's liking this. So, Paul, this is the company behind you. Tell us your first thoughts from the Everything Money software. You can get it as a Patreon. What's going on with this company? What is the market cap?
All right, $28 billion, 12.7 PE with 4.4% margin. So the gross margin is only 22 and the profit margin is 4.4. I love the PE being low, and I like the return on assets and return on invested capital being very high. Nice dividend of 2.1%, and they can easily afford that dividend. 5-year free cash flow is $2 billion. The last year was 3.5, so they can easily afford the dividend. Revenue of $50 billion. Wow, is this a car company?
I was going to see, what sector do you think this is?
I think the return on assets and return on invested capital is too high to be a car company. But the price to sales ratio, maybe it is a car company.
So elaborate more, because again, there's a lot of newbies watching this, Paul. Like, go back to that free cash and what that means.
This is a car company. I'm going to say this is a car company. Can you just tell me if I'm right or wrong?
No.
It's a car company. All right, here's why it's a car company. I'm actually surprised. The return on assets and return on invested capital are higher than most car companies, but the margins make a lot of sense.
Very
the
thin.
PE makes sense. What was that?
The margins are very thin.
Yeah, margins aren't good in the car companies. And it's a bigger car company with $50 billion in revenue, so I can understand this dividend yield. Okay.
Shall we keep going?
Yeah, let's go.
Okay, let's look at, this is the income statement, Paul.
Okay.
Now shout out some numbers here.
39 to 50, that's a check mark there, declining from 10 years ago. Okay. All right. Cost of goods sold, let's see, that's pretty consistent. 20 billion, 10, 25, okay. Sorry, 10 billion, 10 billion, 10 billion, 10 billion, 9 billion, 9 billion.
This is cost of goods sold?
Yep, this is, okay, so it's pretty consistently 25%.
Okay.
All right, keep going.
Keep going. Okay, here we go. Shares outstanding and profit.
Net income. Growth.
Going up, I like it.
Recession time, or brought the recession time. Okay. Shares outstanding, declining.
Give us the numbers on those shares now.
309 down to 253.
That's nice. So they're buying back?
They're buying back shares. Even over the last 10 years, they've been buying back shares.
They're doing all the right things, Paul.
All right, is this a car company now? Boy, that margin just makes me think it's a car company. And the price to sales ratio. The price to sales ratio is really what got me. It's a car company. Look at them smiling and giggling.
Okay, here is the current assets over current liabilities, which is pillar number 6, Paul.
11.3. Let's see the inventory real quick. Half of their inventory, half of their current assets is inventory. Okay, that doesn't really give it away, but go ahead.
Okay. Liabilities.
Wait a second. Current liabilities 9.64. Okay, is that the check mark? They have enough to pay off their. Let's see their total liabilities. Do you have that by chance?
Total, is it here? Yeah, total
13.55. Okay.
Total liabilities. Yeah, 13.5 bill. You're stumped a little bit.
It doesn't seem car company-esque. However, it could be a very smart foreign car company that doesn't have lots of liabilities. So let's keep going.
Okay. Paul, show me the free cash flow and tell me the numbers.
All right, 1.7 billion in free cash flow to 3.5. That's a check mark. It's doubling in the last 5 years. And 2.1 is the average times 20, 42 billion.
Oh, 42 billion. The actual market cap is 28 billion. Paul.
Yeah, so check mark there. The PE was low. Now, if it's a car company, I'm just confused by the free cash. Would have thought a bigger jump last year.
Down or up? Down, right? You were
no, I thought bigger because they had a big surge at the end of the year, at the middle of the year, the end of the year, the surge of
Oh, that's right. Gotcha.
Yeah.
Here are the 8 pillars. Oh, wait, here's free cash. We don't need this one, right? We're good?
We don't need that one.
Okay, here are the 8 pillars, Paul. The question is...
The question is, which car company is this?
What's the market cap?
$28 billion.
$28 billion.
On $50 billion in revenue, Mo. It's this along with this. It just makes me think this is a car company. So which one is it? Is it Toyota, Volkswagen, Honda?
Are
you currently interested in buying this company with these numbers?
I don't know. I wasn't even thinking car company.
I am interested in buying this company. I want to do a stock analyzer tool, but it depends. Now, remember one thing, though. Car companies have had a big surge recently. Debt's higher. People are buying more. The world's in a big economic expansion. So I'd want to make sure it's a car company that I want to look at their numbers.
Tim, should we just tell them it's...
No. Okay. It's not a car company then.
It's not a car company.
Oh, wow. Really?
Let's go to Mo and we'll come back.
Okay.
Mo, are people trading this phantom stock in the Bid-Ask Nation?
I think it's a newer company. Some kind of newy...
What do you mean newer company?
5-year hypey kind of thing.
Okay.
That's where I'm going. That's the direction I'm
but
going.
I love where the stochastic is here. Look at this puppy.
Yeah, me too. I mean, this is looking great. It moved into the sweet spot just yesterday. It has a little bit of a jump today. I mean, if we break this resistance point of, I don't know, $115, now let's go over here and just...
Moving averages?
The moving averages. So the problem is, just like I said, that 115, it's whatever the 100-day moving average is. So if we can get through that, which we need volume.
Volume, yes.
I do not like the volume on this stock on a consistent basis. So if it can get a big green volume bar for maybe 5 days in a row, break this 100-day, this is a stock that I would certainly buy based on what I'm seeing, except the bid-ask difference is 8 cents.
We got to watch that bid-ask. We got to watch it. We want that bid-ask lower.
Like. So
why is the bid-ask difference?
Because the volume is so low, Mo? I mean, no one cares about it at the moment?
It could be low volume. It could be...
8 cents is a big difference in bid-ask?
Yes,
yeah, I like to see 1 or 2 cents on. Maybe on something like this, it's 100. What's the price of this thing? $115.
But the volume's not big. You need 1 million shares of volume, right?
Yeah, this one might be just be skewed. Let's see here. So this is 1.3 million trades, 1.7. So the volume is there today, 329,000 though. So that could be your bid-ask difference spread.
Okay, Paul, we're going to go over to the stock analyzer tool. You can get this software if you want to join our Patreon. This stock analyzer tool transfers all the fundamentals we just did. Now comes up using these numbers. What should we be paying for this stock? Paul is interested. Mo is in too. Mo is as well. So let's take a look. Paul, what about our revenue growth? We can see the historical data. So give me some 3,
5, and 7.
3, 5, 7. Okay.
Share change. Oh wow, look at that. Put -2, -3.5, -5.
-5. Okay.
Profit margin. Oh boy.
This isn't going to change, is it?
Well, yeah, because I mean, I look at the 10 years, and last year might have been a fluke. So I'm going to go 2.5, 3.5, 4.5.
Okay.
Free cash flow. Do the same thing. Do 3.5. 5. 6.5.
6.5 for free cash. Got it.
PE 12, 15, 18.
12, 15, and 18. Okay.
Price to free cash flow, same thing. 12, 15, 18.
15,
and 15.
Desired annual return now.
I want 15%.
That's a lot.
12.5 and 10.
Okay,
so remember,
12.5.
the more return you want, the lower the stock price. That's why it's in the low section, right?
Okay, let's hit the analyze button on the stock analyzer tool and see what we get.
I'm going to turn around. It's not going to show me the stock, is it?
No, here you go. Turn around. You're great. Here you are.
Oh, wow, look at that.
So the current price is 113. Tell me about what you're seeing.
So usually as a value investor, you want to buy as close to this as possible. So it's at 113. So if you do options out there, what you can do is sell puts. If I really want to buy the stock, I'm probably going to sell puts at around $80 to $100 a share at some point. If I really, now, once I find out what stock it is and go do more research and say, yep, I want to own the stock and I do think it's worth this 126 to 180. If I really believe it's worth closer to the 180 number, I'm going to do that. But yeah, I kind of like this.
Paul, Tim is telling me to ask you that, do you think this company will be around in 5 years?
So my value investing mentor, Gary Mashuras, asked that question very often. I cannot give that answer here, and here's the reason why. That's like saying, Paul, will you be around in 5 years? In all likelihood, this company will be around in 5 years. However, Paul, will you be around in 5 years? And here's the caveats. I'm addicted to cocaine, crystal meth, and I like extreme sports, including jumping out of an airplane without a parachute and finding the parachute. I don't know. I mean, those things do factor in there. In all likelihood, based on being a $28 billion company, it will be around in 5 years. But I wouldn't say, do I think it will be? Why are you smiling? Let's hear this.
Are you ready to meet your bride?
Oh, wow.
I'm
Best
surprised.
Buy.
I'm surprised.
Oh, wow. That's great. And by the way, I've loved Best Buy between $80 and $100 a share. I said that a year ago. I loved it between $80 and $100 a share. That's great.
Best Buy.
I love Best Buy.
They'll be around.
I think
in
they've
5
done
years.
I think they've done a great job competing with Amazon on home deliveries, picking up in the store, all that stuff. They
have the Best Buy team that comes into your house and fixes your Wi-Fi, your computers. They match Amazon. They have return policies phenomenal.
And they have better service. You go there, you can ask questions of somebody and say, what's the deal with this, etc. It's nice sometimes to go to a store and just talk to somebody about stuff.
Mo, is Best Buy on the Bid Ask Nation watch list, or
people often talk about it? We have not traded it yet, but I think I'm going to put it on there. The thing that got me was I was thinking about a company that had a great run up during COVID and then just stopped and just kind of went. And I thought that, I mean, Best Buy was one of the ones I just thought going.
Yeah, I couldn't believe it, Paul. I got new Wi-Fi, the Eero systems at the new house.
Eero's great.
Best Buy came to the house and they're looking all over. They're putting in all this stuff, all for free. I was like, and we made the order right then and there. It was really, really great. A grand advantage over Amazon is someone can come and tell me exactly what I need, and they can bill me right now.
The share is outstanding. Damn it. That's great though. Best Buy is wonderful. I still like them. They've done a really good job turning themselves around, and I do actually think Best Buy will be around for a long time. I think they've done a great job competing with Amazon.
And they are very good at appliance. They have basically every appliance there. You can actually see it. You don't have to be surprised when it shows up on your front step and you're like, I don't want this. So, I mean, washer dryers, that's what's up.
Mo with the great clothes as always.
That's what's up.
So that's our take. Best Buy, a great company. People are loving your blind reactions, Paul, just to take out the fluff.
And that's what they should
news.
be doing, by the way. That's what you should be doing when you look at a company. Start with looking at it blindly. In fact, we need to add that as part of our software of saying, let me do analysis on companies that fit my criteria and don't tell me what the companies are. Let me just look at them and say, what would I pay for this?
Incognito mode.
Yeah, incognito mode, exactly. And then, I don't know, I think that's a great idea. But yeah, Best Buy, I've been a fan of Best Buy stock. What was it a year ago?
Does the sector scare you away, Paul?
I mean, retail, you just got to pay low. I do believe in that lower premium then I do think Best Buy, because of being retail, physical locations. But I also think they're going to have good negotiating power with their leases in the future, because what's going to replace a big 25,000 square foot store? I mean, who's going to replace that? Amazon? Maybe. But Best Buy's going to have good negotiations saying, listen, we're not going to leave, but we need better terms.
So pre-COVID, this was $90 stock. It dropped all the way down to $50.
Yep, and I had some puts on them, and I thought they were going to go lower, and they didn't. So, shame on me.
That's our take on Best Buy. That's a take on a blind reaction. We're going to do more of these, and practice yourself at home. If you're a patron, try this in the software, and
try it on the charts too.
Yeah, try it on the charts.
Whole thing.
Sure.
I mean, you like I always say, block out price, block out ticker, just recognize the pattern over and over.
Fondle the thumbs up on the way out. We'll see you guys on our live streams. Thanks for watching. See you next time.